Well, good day, all. Ira Epstein with your financial markets wrap-up, and this wrap-up is for a pretty wild trading day, one that I think took a lot of traders by surprise on this Thursday, the 24th of April, 2025, just getting on to 7 p.m. Central Time. So it was FOMO. You remember what that is. That's fear of missing out. And I think it gripped the stock market as the rally I thought yesterday would take place. Actually, I thought the rally began, if you'll recall, on Tuesday. I expected, after the big break on Monday, the old Tuesday reversal. Expected further play into Wednesday. Today's play was the one that surprised me that it kept going with it. What it does mean to me is that April 7th low in the indices is even more important now than I thought it was. It makes a good case that the market has seen a trade low period. It may not even have to visit it again. The one thing none of us know is what's going to happen with the tariffs, what's the president going to be able to pull out of his magic hat, and where's that going to lead us all? And it's just every day more information and more of we don't know what to believe. This morning, the Chinese were very clear. They broadcasted very clearly there are no talks going on. The president came out once he saw that and said, that's not true. We are talking to them. I don't know which way to go with that. But that's the Chinese. That's only one. What about the rest of the deals? We didn't even hear about that, and they have to get done. Now, in terms of news that you're getting back and forth, you know, the tolls are starting to be felt. You're starting to see the tariff at the port of Los Angeles, our biggest port, the shipments coming in from China down sharply. The question that you hear when you're watching financial TV is, will people be running out of stocks of supplies? Well, folks, not everything comes from China. That's the first. Number two, there was a lot of stocking up before the tariff war began. This was well known, and there's a lot of that. If it goes on for 6 months, a year, yeah, you will run out of things that you count on from China. But if it's shorter duration, no. That just gets you all scared and going, and that's part of what trading is about. You got to be able to filter these things out. Tomorrow, the only real economic news other than earnings reports are going to be the University of Michigan final consumer sentiment. That comes out at 9 o'clock. And the question is, how close to the first projections will the market come in? So we will see just where that's going to come. So as I said, today was a day about running in the stock markets, and they were all running pretty darn good. As they ran up, you took the bonds and the notes, even in the futures markets, higher. I used that, and don't mind telling you that I had told my clients to buy too high in the 5-year note. And I used the rally today, and I'm the happiest guy there is. They turned a small profit, and it was a position I was not liking. As we look at the other currencies, you can see most rallied today against the dollar, which was down about 47 points. So early on tonight, you're getting a little bounce in the dollar, but not an awful lot there to hang your hat on one way or the other. The cotton market was a strong market today. It didn't break much in any manner, way, shape, or form. And you're starting to get stability into the grain market. So we'll see where that goes. When we look at the S&P, you can see how the market now from that break low is starting to come up on a weekly basis. This is important. Here's that April 7th low that we were talking about. Now, you're coming into your first real resistance band up here towards the 5,800 level. Do I know if we'll get there? That's 300 points from here. I have my doubts, but so what? Doesn't matter. At this point, the trend is up. Higher lows, higher highs. That's the definition of an uptrend. What the market would have to take out is right here, the low of 53, 55, 50, and that negates the trend to the upside. You had an outside day up today as well. I'll take you right to that, and you can see it. So until that is taken out tomorrow, day after, it's a number you keep your eye on. When we look at where the markets are in relation to moving averages, notice the battleground the market fought at. You got up, and let's take this back just a little bit and go back, if we could, together to Wednesday's action. And the market today made a lower low, so it came back to that 18-day average. Then it launched itself, and tonight the market is trying to continue that action up. Way above the market is the 58.70 level on the 200-day average, and in the green, the 100. The Bollinger Band, when we look at it, comes in at a lower level, and that number will come in at 57.34, and the market is overbought. So to get anywhere up there, we'll see if you can reach for it. You'll need some bullish news other than the market's just going, oh, here it comes, and I want to join in. Remember, this market has had a heck of a break. Don't lose sight of that, and everybody doesn't want to miss out, and I know that. I can just see it in how the trading is going on, looking there. They don't want to miss out on the market. I still think I gave good advice. You use this rally right now, and you rotate out of things you don't want to own back into things you might want to own if you're in the stock market. In looking at how the NASDAQ is, it's the same picture. The resistance, if it continues to rally, up near the 20,004 level. Support 1863, and again, an outside day to the upside. So the markets came down after getting over the 18-day average of closes on Wednesday, fell back into them today, reversed course and went up. Now the question is, what can they do with that? The Dow is doing the same thing. Look at how the battle's going right on through that market. And again, this market's not quite in the pretty pattern of the other two, because it's got a pattern here that you can argue a lower highs and a higher low. I'm not seeing the clearer trend. To get me thinking it's better, you've got to take out the, let's say, what would that number be? Let's go back here right to this day. That high was 40,558. That's the number you have to get up and over now to get me thinking more can happen in the market. I'm not saying it can't, but it's 300 points away. That's not easy. When we step into the Russell, higher lows, nope. You got a higher high and a lower low, and you're overbought. So you get a little messy on the charts in the Dow and the Russell, a cleaner picture to the upside in the S&P and the NASDAQ at this point. Then you look at the DAX, and if you'll recall, I mentioned you had an outside day down, and you took that out. When that occurs, markets often, before they go back under that low, make a run to the closest moving average and or a Bollinger Band, and it could even be a window envelope that is right up there. But it's done very much what I wanted it to do. So it's an interesting chart. Then in the 10-year notes, look at how you're fighting a battle at the 18-day average in sideways action. This market's just plain stuck. It doesn't know, should I try to add yield? Should I try to take yield away? It's gotten very quiet, and the same in the 2-year. They've both hung in now right at their 18-day averages and aren't doing much. When we look at the dollar index, we've gotten up high enough between the trade on Wednesday and Thursday to take out prior highs, and now the market's sitting. It lost its bearish embedded reading, typically, before you go down and make the lowest low. You make a run for the 18-day average over that pattern. I can't guarantee it'll happen in any manner, but it's the higher probability of that happening. Now, you never did have the embedded reading in the euro, so it doesn't have to get down as low as the dollar goes up, but typically they just, like mirrors, they go the other way, because 57% of the eurocurrency is embedded into what makes up the dollar index, so the weighting is very heavy. In the British pound, I was watching today Mr. Bailey he was interviewed on CNBC and what he thought about the market. I walked away just thinking that there could be a series of cuts as they want to supply and help the market with monetary supply and what is going on. The market likes what it's seeing so far. It's staying in a bullish pattern with an embedded reading until that reading is lost, with the red number, which is right now at 85.68, closing under 79. I still look for higher prices to be happening there. In the Bitcoin, move to the May. The April contract goes off the board tomorrow, so you want to make your move now. Notice you're getting your embedded reading. I thought the market could be back on track for the 100,000 level approximately. I haven't changed my opinion. They're going to move all that open interest in trading tomorrow, so you'll see it make its move. I didn't say it has to go to 100,000. That's where I think it's going, though. In the crude, this is your battleground. You've been at it now for basically 4 days, fighting at the 18-day average which way do you go from here? The same identical things happening in WTI oil. I don't see a trend in either yet. You're trying to get a little bit of an uptrend now going in the gasoline. Unless we come back and take out the Thursday lows, the pros are trying to goose this market up, and the first target could be, if they're successful, the 220 level. Take out the lows that you have made today, Thursday, at the 206.75 level. Take that out. You have a complete failure of the market, and you open it up for even more to the downside. So it'll be interesting to see what happens. So far, it's a bear market rally. Look at how overbought you've gotten trying to get there, and it's giving you the first attempt at a buy signal. I'd use a lot of caution with that. Nat gas not even lifting its head up. It just keeps coming down lower and lower. This is the kind of market that's getting stretched. And as it gets really stretched out by this, you'll get a reaction in the market that can rip your head off. So be careful if you're trading this, and don't turn your back on it without having orders in. It would be my recommendation to protect whatever positions you have on. I'm Ira Epstein. Remember, if you want more of our offerings and keep up with our news and what we do, just follow my finger up here, put a cursor on the top. You can click that or go to iraepstein.com, free offers. I'm Ira. Catch up with you in the morning.